Good evening and welcome to another insightful edition of Capital Markets this weekend. I'm Temple Ashaju. On the show this evening, quite a number of news updates await you as we've also dedicated some time for market review. But on the larger scale, 2018 is still a new year, and on that note, we have the privilege of getting the 2018 economic outlook from United Capital, one of the major research investment homes in Nigeria. And one of the analysts is here with us in the studio to give us the analysis of that report, which is an 83-page book being put together by that investment firm. As a taxpayer, you already know about the federal government's Voluntary Assets and Income Declaration Scheme, known as VADS for short. But does it have any link with the Nigerian capital market in any ways? We'll find out on the program as well this evening, as a major consultant on that scheme will be joining us to give us his insight on all of that as well. But before the analysis that we've lined up for you, let's catch up with some major stories that we have in the news, and we'll start with the FMDQ OTC monthly data, which talks about what has been generated for the month of December. The FMDQ OTC Securities Exchange recorded 11.86 trillion naira in turnover in December 2017 on account of its fixed income and currency markets performance. The record represents a 20.15% or 2.99 trillion naira decrease from the value recorded in November 2017 and a 3.26% decline year-on-year, as the secondary markets activities decelerated in the last month of the year. Activities in treasury bills market accounted for 35.25% of total turnover, while foreign exchange markets accounted for 33.63% of the total turnover. The money market, comprising repurchase agreements or repos and buybacks, as well as unsecured placements, accounted for 24.30% of the total market turnover. The three segments contributed 93.10% of total turnover in the platform for the period under review. Now, the Nigerian Stock Exchange has placed 7-Up Bottling Company on full suspension with effect from Friday, the 12th of January 2018. The suspension is for the purpose of determining the shareholders who will qualify to receive the scheme consideration following the decision of the company's majority shareholder of Felka, South Africa, to acquire all outstanding and issued shares of 7-Up Bottling Company not currently owned by Felka. Shareholders of 7-Up passed a resolution to this effect at the court-ordered meeting on Thursday. The scheme will result in the voluntary delisting of 7-Up from the Nigerian Stock Exchange. And for a form of capital raising, Flour Mill has now gotten the approval of the Nigerian Stock Exchange to commence its rights issue. The proposed rights issue of Flour Mills Nigeria PLC opens for subscription on Monday, the 15th of January, and over 1.476 billion ordinary shares of 50 kobo each is offered at 27 naira per share on the basis of 9 new ordinary shares for every 16 ordinary shares held as at December the 8th of 2017. Now, a bit of the equities market review. That's markets, Nigerian Stock Exchange, where equities are traded. Its all-share index this week came up 42,898.90, having clinched 10.21%. The market capitalization crossed to 15.368 trillion naira, advancing some 10.95%, while total volume of all that was traded this week came in at 5.021 billion and valued at 68.974 billion naira. Total deals was 41,542. In terms of sectoral performance, the banking index comes first with 12.88%, about the largest, but coming after industrial goods sector, which did 12.98%. Generally, the major sectors in that market all turned positive this week. In terms of gainers, we've got Honeywell, Skybank, as well as Champion Breweries as the major performers when it comes to gainers. Honeywell did 39.68%. Generally, in that side of the market. In terms of the losers, we have Mayer, DN Mayer, as well as GlaxoSmithKline and Dangote Sugar, where profit-taking took over the decision of investors on the side of the markets. And it's still New Year, and we're still collecting the available reports on the 2018 economic outlook for Nigeria and, of course, the world at large. So let's join Wale Olusi, who's a research analyst at United Capital now, to share his thoughts with us. Of course, give us analysis on the 83-page report that United Capital has come up with. What do you folks see at United Capital this time in terms of macroeconomic outlook globally and domestically?
Yeah, thank you for having me, Temple. So for us in the report, what we are seeing is a broad positive economy from the global to the domestic market. In the global market, what we notice is that most of the largest economies in the world are all growing at a very synchronized manner.
Right.
According to the OECD, about 45 of them, they are all growing. And that's the first time that is happening in the last 8 years since the financial crisis. In the domestic markets, the economy is also strengthening from probably 1 or less than 1% in 2017. We're expecting growth to be above 2%, 2.5% to be precise. We expect oil prices to also improve. Interest rates should come down. Inflation should also come down. And then the reserve should also strengthen. So overall, corporate earnings should improve. Investors should also be happy because we're also seeing equities gaining momentum in 2018. So overall, we think it's going to be a better year, but growth will not be as strong as it used to be before 2014, before 2015, where we recorded a 2-point-something% growth for the year. We're also saying that for Nigeria to go back to a growth that's above 6%, for example, then we'll need bold reforms, especially in sectors like oil and gas, agric, the transport system, healthcare, as well as what's it called, the rail and all of these other sectors.
Infrastructure.
Exactly.
So you talked about oil improving. Does that mean that we are really out of the wood? Yes, during the week it actually touched $70 per barrel, retracted again to 69.27.
So oil can really be a very tricky price to discuss. But what we are seeing is there's this increased geopolitical tension around the world. When it's negatively at